Hello everyone, it's Market Organized. Today we have some big news. The jobs report came out to be pretty low in the market. So we've only created 38,000 jobs in May. So this report actually shows a broad hiring slowdown and across industries. So that's what's unique about it. And also the forecast was 160,000 jobs to be created, but we came up very short. And because of this, we were expected to we were thinking, we were expecting the Federal Reserve to raise interest rates in June, but at this point it might be unlikely, and it's just my opinion. But because it's putting the Fed in a unique situation. On one hand, we have unemployment going down to 4.7%, which is the lowest since 2007. But on the other hand, we're having only 30,000 jobs created this month. So for the Fed to increase interest rates, you got to have a strong economy and employment. Those data are their main indicator. So at this point, the May employment came out pretty bad. So I'm doubting it that they're going to increase the interest rates anytime soon. But with that being said, 1 month's report is not enough data. So we're still going to have to wait and see what will happen in June. So going over the charts, today, yeah, the market is down a little, not too much. This is the NASDAQ. And I still see demand here. We have demand here, and then we have supply on the top here. We haven't made a new high yet, but from what I saw this week and last week, we've had many stocks making new highs and going up. So this shows me that we are in a strong bull market. We're still in a strong bull market. So I wouldn't be surprised if this is if we had a breakout from here and then making new highs again. And same thing with the S&P 500. Actually, the S&P 500 is actually trying to make a new high. I know today we've had an upset in the jobs market, but I still think that still not bad. We still have 4.7% unemployment rate, which is pretty good. Which is good actually. Which since 2007 is the highest since 2007. So we're so the market is not doing that bad at this point, and I think 1 month's upset. The fact that we thought we were gonna have 160,000 jobs created, and now we're only having 30,000 jobs created, doesn't mean that it's gonna destroy the market, because that's just 1 month's data. And if you look at the bigger picture is still good. We have a huge uptrend in the past, and we've just taken a break. We have some demand here. And unless we break this line, I still think that we're still in an uptrend, and I wouldn't be surprised if this thing goes up. But with that being said, I'm still, this is something that this is just technical analysis. Anything can happen, anything can change, and that's what's happening in the market at this point. So it's important to look at supply and demand areas. So so far the market is still in a range bound trend. And but also we've had some pullback from here at the bottom. So we have a strong demand at this point. So and we have the uptrend here. So the bias is we're still in an uptrend market at this point. So that's important to note. But we just want to be able to know what the overall market is doing. So at this point, the overall market is not doing that bad. So even if you buy stocks, it's not still not bad. But you just want to be able to be careful, because when the overall market is going down, chances are a lot of stocks will follow that. So that's why it's important to know the overall market. So I'll just keep a close eye on this and see what will happen in the future. And that's it for today's analysis.